Now, I touched on the inventory situation before. Now, what we're looking at here is what our current expectations of the inventories in the channels are at this moment. We are seeing a shift to much more normal levels than what we have seen in the last 12 to 18 months, where it has been an issue. Oversupply has been an issue. A lot of it coming from strong levels of pre-buying post-pandemic due to concerns over product supply. And then coupled this with poor weather conditions that weren't very conducive to product usage. We then had a lot of product sitting on farm, at retail, and at distribution as well. So this backlog in inventory made it very difficult for suppliers to move product into the first part of the chain. However, we are seeing it now start to normalise. I'd say in North America, we're much closer to normal levels, and we have seen a big switch to just-in-time purchasing in that region. Central and South America, inventories starting to head in the right direction, but we are still seeing issues over poor weather in 23-24. A lot of low-priced exports from China as well. Much improved 2024-25 did relieve some pressure, and we are seeing higher areas now in 25-26 for key crops, which could, again, further alleviate any issues around inventory. For Europe, much more normal situation, improved conditions for the 2025 winter crop, so able to move through the channel here. Some eastern areas still impacted by dryness, so there are concerns that there could be build-up there. But at the moment, situation is very much more normal than what we have seen. For Southeast Asia and China, erratic monsoon did lead to issues around easing of inventory situation in India, so we are still having a slight issue there. Big capacity additions in China is likely to mean higher inventories in that country. But we are expecting increased pest pressure, which could help that through the coming season. And for Southeast Asia and Australia, down from where we've seen it a year or so ago, but we are seeing dry weather conditions and a lower wheat area in Australia, which could hamper inventory drawdown. So no real significant improvement expected in the coming year for Southeast Asia and Australia. But what I would say is we have seen a significantly eased off situation than where we were at a year or so ago. So definitely this is a benefit to, I wouldn't necessarily say the inventory situation has a direct impact on the market when we're talking about product usage on the ground, but it does obviously affect the companies that are looking to supply into the channel, and that can have a detrimental impact on price, which I guess can knock down all the way to usage on the ground. Now here, this is the 2025 market, so I won't go into a lot of detail, but it's just to give an idea of how we were moving through from 24 into 25. And in nominal terms, so that's not including any effects of currency, we are looking at, so that is taking effects of currency. We're looking at a decline of 1.8% in the crop protection market used on the ground. If we take out the effects of currency and look at the market in constant terms, we're actually looking at 2% growth. So the negativity really coming in from currency conversion. As I said, during that particular year, we were looking at a stronger US dollar. When we take out those effects, we're seeing actually a market increase. So a lot of recovery coming in from the situation that we had in 23-24. You can see there 24 was actually down 6.3%. So we have seen improvement in the market in 2025, and we are getting to a much more normal situation. So what I would say is that it's my expectation that 2024 represented a recent low point, and we are starting to get a lot of recovery coming into the market now, based on some of the things that we talked about and that I'll talk about later. But as you can see, the situation is much better than where we were at in 2024. Now, obviously, in the last couple of years, we have seen quite a sharp influx of new product introductions. A lot of this driven by the requirement for new modes of action to control resistance issues in a lot of markets in particular. And we've also seen a lot of new generation products coming through from the R&D majors and a lot of these now have been introduced into the market. So obviously we would expect these to have an influence as we move through the year. And as I said, resistance issues can often lead to quite good acceptance of new products. For example, in North America, we're now seeing metametron being approved for apple and pear. That says the US, but I think it's actually Canada, so it's a new introduction into Canada. We're seeing amikarbazole now being introduced into maize as a pre-emergence herbicide in the US. And we've seen Syngenta introduce cyclobutyric as a seed treatment, but also as a foliar application on turf and ornamental. So that's an interesting development. In Europe, we've seen fenpicoximid from Corteva start to expand into new markets, including in combinations with azole fungicides. Fenpicoximid, quite a recent introduction, but one that is from a new class and one that can provide good fit for septoria control where resistance has been a big problem. Bayer receiving an expansion in the UK for isoflurane, which is a relatively new fungicide as well. And orange oil now available for potato blight, which is an interesting development. Obviously, the bio market is one that is continuing to grow. In Central and South America, we're seeing spidoxima introduced into Colombia. This is the very first global introduction. And that's an interesting one because it's targeted at the control of sucking pests. And this is a sector where there has been resistance issues and also regulatory issues against products such as the neonicotinoids in recent years. So this is a good sucking pest control option. We're seeing FMC start to introduce its pheromone-based products for fall armyworm control. Also, its new herbicide, tetflupyrolimet, which again is a new mode of action, which is very well accepted in the weed control market. Another new product from FMC, fluindapyr, now launched in Argentina. We've seen Syngenta also introduce cyclobutyric in Brazil. New humic control product from Bayer in Brazil as well. Fentropidin now introduced in Brazil, and also a new insecticide, fluxamitamide, launched in Argentina as well. So a lot of new products of interest launched in 2025 that we'd expect to start gaining market share in 2026. For Asia Pacific, there is several here, so I won't go into them point by point, but we have seen new herbicides in India, such as tolpyrrolate. We're seeing new broad-spectrum insecticide, triflumiazopyram, coming in through a domestic company, but licensed in from Corteva. And a lot of new products in the Indian market, interestingly. Also, synmethylin from BSF, which is a new mode of action herbicide. Several new products coming into the Asia-Pacific market over the next year. A lot of it in India, but also a lot of it in India coming through collaboration with the multinationals as well. So a much more dynamic situation in terms of new product introductions in Asia Pacific, which we would expect to have an influence on market development as we move through 2026. Now, agrochemical pricing is obviously something that has been an issue and a key topic in recent years. This slide is looking at agrochemical price development for China. It's looking at ex-factory prices from China. And what we're seeing is indexed from 2019. So you can see the huge spike at the end of 2021. That is related to issues that I talked about before, where very high levels of pre-buying, high demand, post-COVID, and growers very much hoping to have enough supply to last them for that particular season or two. We did see then lower demand based on weather and high inventories then starting to lead to price erosion. This was also capacities were increasing as well. So more supply, but less demand. So prices started to fall considerably. But as we head into 2024, 2025, we did see a normalization and it reverted to a much more normal supply-demand dynamic where pricing, it was obviously still extremely low by the index levels, but it was normalizing off. However, if we look through the current period into the sort of parts of 2025 now, we are, the prices are still considerably lower than where we were. We are seeing a lot of capacity being put online in China. we have a question mark here. Does that mean that price is going to continue to fall as we move into 2026? Expectations would actually be that we're seeing a bit more price stability as we move into 2026. We are seeing some actual price improvement for big products such as glyphosate, but some other big products such as chlorantraniliprole, we can expect price declines there based on, for example, increased generic competition. So high capacity, still an issue. And so supply demand not quite at equilibrium. So we are still seeing, price deflation, but much more stable than where we have been in the last couple of years. So I wouldn't expect it to have a hugely detrimental impact on market development in 2026. This is the situation and price development in the EU on the left and in the US on the right. The US chart actually follows quite a similar pattern to what we see in China, where it spiked up post-pandemic and then came down again. However, what's interesting about the US chart is that prices have actually been sustained at relatively higher levels than where we've seen in 2020. So price much more stable in the US, but quite flat again. But then again, expectations for no significant decline. EU 27, the dynamic is slightly different there. The biggest impact on EU 27 crop input prices was actually the Russian invasion of Ukraine, which pushed up energy prices in Europe quite significantly, which then obviously increased costs of production. So the curve is much different in the EU, where the big increase happened in 2022 following that event. We have seen prices start to come down slightly from the peak that they reached in 2023, but still, EU 27 prices still above what we've seen in 2021 and 2022. Now, commodity prices play a significant role in the development of the crop protection market. Obviously, how much a grower has to spend on crop protection products is strongly determined by how much money he is going to make for the crops that he is growing and then selling. So commodity prices are very closely tied to the development of the crop protection market. What we have on this chart is we've highlighted certain points in history where commodity prices spiked up to very high levels. All of these also correspond to very positive development in the global crop protection market. And we're also looking at futures prices here as well, just to get an idea if we can expect any improvement as we move through to 2026. So as you can see, the last couple of years has been quite a difficult situation for most of the traded crops, particularly maize and soybean, which has a huge impact on obviously US growers. But what we can see from the futures expectations is that actually price will stabilize, in some cases start to come up. Still not at the levels that we've seen in 2022, but a much more stable situation with no big declines expected over the next year. So the commodity price situation, while we're still looking at, depressed from where we were, by historical standards, not too bad. So not a huge impact from low expectations for declining commodity prices in 2026. This just gives an idea overall of where we're thinking in terms of the yearly average. So you can see the crop's still trending slightly downward, but not at the same rate that we've seen between 2022 and 2025. And in fact, some crops not so negative at all, including oilseed rape. But obviously there is still issues over grower profitability, economics of production that farmers have to overcome. But this is really highlighting that while we are still seeing a low commodity pricing environment, we don't expect, significant declines. So we're looking at a relatively stable situation, although, still having a significant impact on the grower. Now, there's a lot of information here. I won't go into every detail, but what it's really showing is the profitability of production for this slide's looking at US maize. The next one will look at soybean. And it just gives an idea on why we're maybe seeing a higher area this year at the expense of soybean. So you can see trading net price and return 2026 is expected to be, down by minus $250 an acre. So obviously, sorry, a hectare. So obviously, still a significant issue for US maize growers, but it's not as negative as what we've seen in 2024. If we look at soybean, okay, it's significantly more negative. So that's why we have, one of the reasons why we're looking at a switch away from soybean into maize. And again, we're actually looking at levels that are the lowest that we've seen in the last 10 to 15 years for 2026 soybean net return. So trading prices still quite low. Ink costs actually increasing quite rapidly. So what we're effectively seeing is net returns still in the negative, but for soybean much more so than for maize. Now, in terms of Europe, we're also looking at which markets are planting more of the key crops. For the EU27, we're actually seeing a higher soft wheat area, which is obviously one of the most significant crops in terms of the crop protection market there. France and the UK, very significant cereal markets, so increasing there, which is a positive. Some other countries declining, but we'd expect the positives to outweigh the lower ones in countries like Germany. The other countries in the east and south not so focused on wheat production as the northern countries. For maize, we're actually expecting a decline in maize plantings in the EU, which obviously would have a detrimental impact on maize crop protection market effectively. Oilseed rape, actually much more positive. We have seen more positive oilseed rape prices. We have seen higher demand for oilseed rape in a lot of different markets. Export demand is increasing as well. So this is a crop where growers in the EU are looking to plant much more than what they have in the last couple of years. Now, looking at other countries and regions in terms of crop areas in 2026, when you're looking here at, for example, Brazil, we're continuing to see strong rates of growth in the key crops in Brazil. Maize and soybean both increasing. Argentina, big increases expected in maize and also wheat, which is quite significant in Argentina. So again, EU27, wheat expected to be up, which is a key crop in terms of crop protection spending. So we are seeing still, expected benefits from higher crop areas for key crops as we move through 2026.